Legends, welcome. Welcome to the Daily Buy Show. We dig all charts as they relate to crypto. Hope you're well wherever you are. Disclaimer, this is not financial advice. This is just my view on the markets for educational purposes only. So it is the 17th of December. If you're new here, welcome. I dig all charts as they relate to crypto. We jump into macro markets. We look at the liquidity picture. We jump into Bitcoin structure. And my goal is to help guide you on the trajectory of Bitcoin and crypto markets, the bigger macro moves, some of the bigger swing moves, the swing trades I might be interested in. Okay. Overnight, we had the labor data come out. We're in the heaviest macro, the final heavy macro week for the year. Okay, we've got the BOJ towards the end of the week it'll be Friday morning for me. And overnight, we just had NFPs or payrolls and unemployment. So unemployment was a slight uptake. And however, slight uptick in unemployment. However, payrolls came in slightly better than expectations, right? Slightly higher. So what does it all mean? I put a post out on X earlier this morning, this morning for me. And although unemployment ticked up and payroll slightly beat, in my interpretation, it's a slight softening in the labor market, but it's not weak enough to force the Fed's hand. Okay, so typically when the Fed steps in aggressively, something has to break, right? They're not really ahead of the curve. They're rarely ever ahead of the curve, and something has to break for them to really step in. And if you consider the current environment that we've been talking about in last streams, where liquidity is still relatively tight, we're in a tight liquidity environment, and rates are still high. Okay, so the soft labor read, it's a bit of a nothing burger in my opinion. It is screaming a little bit of weakness, okay, as we've been seeing in the broader markets and as we've already seen with Bitcoin turning macro bearish, okay? So this to me doesn't suggest that the Fed is going to step in aggressively, and we've been saying that for Bitcoin to actually potentially start reversing some structure, it really needs fresh liquidity, and it ultimately needs a change in direction from the Fed, where they go from this tight sort of policy to aggressive easing, where they are doing QE, they are bringing rates down with a steady trajectory. Okay, that's usually what the type of environment where Bitcoin creates the new price discovery parabolas. This isn't that environment, unfortunately, at the moment, if you're a bull, okay? And if you're just paying attention to the price action, Bitcoin is bearish. We'll go through that in a moment. But basically, we even saw in the 2-year and the 10-year yields, not much change, right? Nothing that screams loosening conditions. If there was, if there was some sort of drastic data that the market interprets as forcing the Fed's hand in to come in more aggressively, we'd see it here in the 2-year and the 10-year, where they might dip, 2, 3, 5%. Like, you get these sharp moves down, okay? We didn't get that, pretty muted move. The trajectory of rates hasn't changed, right? So despite the softening labor data, there's still only two anticipated rate cuts for next year. Okay, one potentially in April, and then the final cut here in July. Okay, and then there's some whack data going later out into 2027, right? So hence it hasn't, that data is a bit of a nothing burger for me. It doesn't really change the picture. For now, we're still in a soft labor. It's still a soft labor print, softening of labor. Only 2 cuts price. We're still in a tight liquidity, and the macro pressure stays on crypto. So if we jump into Bitcoin's structure, right? the day has closed. We had a bullish day yesterday, or today, I should say, the day that just closed. It was kind of yesterday for me. And as expected, look, we had 1, 2, 3, 4 straight down days. And yesterday now closed as an inside bar. So for me, with inside bars, I'm observing what happens at the extremes of the candles, because often you'll see here, like in this inside bar here, when you get an inside bar and you see liquidity swept on one side, that typically indicates some type of move in the opposite direction is coming. So I'll be watching this inside bar develop today. But if you've been keeping up with my streams, you know that post this inside outside bar candle formation, then the sweep after throughout the FOMC week tilted my short-term bias bearish in alignment with my long-term bias, or my macro bias, which shifted bearish when we shifted up here, right? So I pointed out that this FOMC level is an important level to be tracking in the short term, because that's my barometer right now on whether the bulls or the bears are going to step in, at least in the short term. So if the bulls are going to step in here, where we get more of that rally to come deeper into a weekly retracement, right? So because we still got to remember that since this weekly high was created, it's been straight down. So if price is going to move like this, okay, we should be expecting new weekly retracement before it turns over again. Okay, so hence this FOMC level is the level we've been tracking as the shorter term barometer on buyers and sellers, or demand and supply, however you want to label it. Okay, whoever's stepping in to take some control. And I'm looking at this level as a potential area to short down into these lows, and I'm open to it going down for continuation, okay, on the weekly, right? The weekly structure is this potentially being the new weekly high for continuation down to these lows. But that FOMC level is my short-term barometer, right? Where above it, I called out in my Substacks. This is my weekly, I do a weekly full market in-depth deep dive of my read on the markets, what's to come. And this is all for free in Substack. So follow me on X. That's where I post them. And when I post as soon as I've put this into Substack. But if we come down here to where I talk about Bitcoin, all right. So in the shorter term, I'm using the FOMC, and I will be, I'm looking for a short currently, that continuation short like I described, as long as we're trading below here, okay, down into these lows. And if we get above here, that's where I said I'll pause and reassess. Okay, so I'll assess price action at that time, because that's where my short-term bias potentially suggests that bulls might be in control, at least for the shorter term. And I'll be observing, what does price action actually look like when we're above the FOMC level? You know, are we getting strong, you know, bullish candles pushing, or are we just coming in to sweep these highs, potentially sweep other liquidity and losing momentum through here? Because as you legends would know, if you've been keeping up with my streams, this is also now my flip zone, okay, where I'm looking for the bigger macro short, continuation short as well. So into this area is my major flip zone. Right, where I said to be high time frame bullish again. Okay, so I'm macro bearish, meaning the weekly structure is bearish like this, and bearish structure moves like this. Okay, so considering this is bearish, I'm waiting for the next retracement to be macro short for continuation, right? So this is the continuation trade, right? So hence, this has to do something like this. And this is where I'm looking at the major flip zone, okay, where that's ideally where I'd like to build my bigger position, my bigger macro swing short position. I've said in yesterday or the day before stream that in the short term, if this liquidity sweep is it, this is now valid as a potential new weekly high. Okay, so if we said this was going to be the structure, this is valid for a new weekly high because we've got 2 consecutive bullish candles. So in my system, if I'm looking at if price is trending bullish like this, for it to make a valid new low here, I want to see 2 consecutive bearish candles in this pullback to validate this as a low when it takes out the new high. Okay, so in this bearish circumstance, oops, I don't want to get rid of my FOMC level. In this bearish circumstance, for this to be a valid retracement to continue back down, I needed to see at least 2 consecutive bullish candles, and I got them here. So hence, now that we're seeing the lower time frame signals as well, we've got the inside outside, and now the outside bar swept, given the context of FOMC, suggesting that sellers may be taking control of the market. This is going to be a valid high if we take out this low. Okay, that will be our new weekly high. Okay, so if we do this, right? Now, my personal view and take is that if this is just going to be the high here, I think we could just be in a bigger range, right? Where maybe we come down to this low, then we come back up, right? And then go lower. Because really I was looking at this flip zone for the deeper retracement. So usually what I see and I believe is the deeper you have a retracement, the more fuel that builds for the continuation. Okay, so hence that's why in this circumstance I am totally fine if price wants to continue from here, because this is validated as a new high because I've got those 2 consecutive candles. But it just makes me think that if it is going to go back down to the lows, even here or here, that we could just be in a bigger range, right? So that's just my general thinking. And again, just coming back to this FOMC level, that's my barometer. Okay, so right now I'm looking to short into this. Okay, if we get into this somewhere through here, down into here, right? That's one of the main shorts I'm looking for at the moment. If we get above, I'll be observing price action, and then I'm observing how price develops into this flip zone so I can try and catch that bigger macro short down to here. Now, just revisiting the higher time frame. Now, why am I looking at this major flip zone? If you're just interested in my logic around this as the major point of interest for the flip zone, well, first and foremost, I'd direct your attention to the weekly bands. Okay, so these are just 1221 EMAs that I use some Pine script to make them flip bullish and bearish. Okay, so they change color dependent on if the 12's above or below the 21. And you'll see from my back testing, and even if you just look at this chart, it's a pretty good confirmation tool of when the macro trend has shifted. Okay, so you'll see here when price is below the bands, eventually the bands turn red, and it means that the macro trend has shifted. And typically for Bitcoin, that means we're in a bear market. And then what you'll find is the bands become resistance until price is ready to shift the macro trend again. See the flip here, okay, and then come back and find the bands as support. Now you got to remember, with any type of EMAs, they're like a derivative on price action, right? So they're lagging. So for me personally, they're not a standalone signal or tool. It's more of a confluence tool that I use. So if you see in the context of price now, so first and foremost, the bands have flipped, and they haven't done that this entire cycle, right? From here to here, the bands have maintained, call it the integrity of the bull market, right? So hence we've got our band flip, and you can see that that's where the bands are now. So that's one confluence point where I was looking, all right, because it's going to come in to test the bands, right? That's one piece that makes up my major flip zone. The other key piece is weekly structure. Now, Bitcoin never breaks weekly structure unless it's ready to shift the macro trend. If you pay attention to this big correction, you notice the primary weekly low is down here, okay? This is internal structure, right? So internal structure, I call this is a complex pullback. Now, if you go onto my YouTube channel and you go into the building block series and you look for complex pullbacks and you look at primary versus internal structure, I've got 2 short videos on exactly how I read market structure and how it map it out. So during this entire pullback, this deep, long correction like this, it never took out the primary low over here. And you could see the bands were never penetrated, right? So this was just a normal big correction, right? This was the first time in the cycle where the structure shifted. The weekly structure shifted, but the bands maintained some integrity there, so of the bull market. And if you look at specifically what happened after that, right, we got the push down. So the shift happened here. You got the push down. We got a weekly low created. We got a weekly high, and we know that's valid because see how I got my 2 consecutive bullish candles. Then we pushed lower into this low, failed to break down. So sellers failed to push the market lower, resulting in the SFP here, right? And we also had the consecutive week sweep, which is a big signature that you'll see in major pivots, okay? You'll see sweep of a key level. So if you've got price doing something like this, right, and this is the key level, as the weekly, and we're talking about the weekly chart, you'll see the sweep, okay? But in this sweep, the candles will be first candle that potentially sweeps the level, and the second candle that sweeps the first candle. And that is a key signature. That is a key signature that happens in major pivots and reversals. So this is one that I suggest that you backtest yourself, and I guarantee this is something that you'd be able to implement in your trading, right? So you see it here as well, see the key level. You got the weekly high, right? And then into the weekly high, you have SFP, but then consecutive week, right? So the second week sweeps the first week, which swept the SFP. Now that's a major reversal signal. And hence that's why I was bearish up here. And when we shifted, I've been macro bearish. Okay, so I encourage you guys to go and test that signal. But coming back to here, we see that when this happened, we got the major signal of shift, okay, of sellers failing to push the market lower. Then what did we get up here? We got a structure shift because this was our primary high holding this trend down. So as soon as this candle closed, and see how it's a nice bullish close beyond the level, right? That was our trigger to be bullish again. And considering the bands never flipped, still bullish. Okay, so now when we come back to price action now, coming into our major flip zone, structure shifted and we haven't yet created a new weekly high, okay? And hence, we've got the bands here. Now, the last piece of confluence I want you to direct your eyes to is the weekly fair value gaps, okay? The most recent weekly fair value gap doesn't invert unless there's a major shift in order flow, which usually means we're shifting from a bull market to a bear market. So you see here back in the previous cycle, here's the last major push, okay? Weekly fair value gap. It shifted here, created a new gap, right? Now, in theory, market structure hadn't shifted yet, right? And we swept these weekly lows. So, oh no, sorry. Here, market structure did shift up here, right? And you get the bearish gap here, okay? But look what happens. Gets above, invalidates that weekly gap, pushes through, okay? So that tells you that buyers have stepped in and taken control because they've inverted the last impulse from sellers, okay? So buyers have taken control. And then you see what happens. We get this sweep back into the high, right? There's our weekly buy side fair value gap. So you would have known that if the buyers are losing control here and the order flow is shifting, the sellers should push through this gap, which they did, and they started creating their own sell side order flow. And see now how the sell side order flow is being respected, as well as the bands are being respected. Okay, that's what I'm looking for. So you got 3 points of confluence there. You've got, first and foremost, most important, market structure. Okay, second, which they'll often fire in this order, order flow. Okay, and then third point of confluence is the TT bands. Okay, so we see it. Structure shifted, right? Order flow shifted. TT bands have confirmed bearish. And on the sell side, we have our gap here. So see, that's what's contributing to my major flip zone now, because for the buyers, at least in the medium term, to gain some type of a momentum, they need to invert this sell side gap and ideally give us a gap of their own on the way of doing that. So my major flip zone starts there, comes into the bands, and then this in the daily structure. So if we drop a time frame lower, that's our current daily structure high. So hence, that's where, if we're above this flip zone, that's what I'll be observing to say, okay, cool. We've at least flipped daily structure. We've flipped the weekly order flow, and we're potentially reclaiming the bands. So that's where I will start to consider amending my bias and becoming bullish again. But I'll be analyzing a lot of the broader charts as well. You know, as your legends know, it's not just the Bitcoin chart we look at. We look at the macro charts. Obviously, price action on Bitcoin is the North Star. However, we use other charts to help guide understanding the environment, the correct environments to be playing in, okay, to be aligned to. So just cleaning that up, we've laid out that this is the bigger macro flip zone where I'll be looking for, if momentum's fading into here, that's where I'm looking for my bigger short, okay, macro short to target continuation, potentially, you know, down, maybe it comes back up, maybe that, don't know, we'll assess it as we go. But that's the area I'll be interested in, that bigger macro short. On the lower time frame, in the shorter term, to understand who's taking control or keeping control of the market or taking control of the market, I'm watching this FOMC level, because remember we discussed that when the Fed cuts rates, they're trying to stimulate some type of risk into the market to some degree, right? They're trying to stimulate participants because they're making money cheaper. So if participants are rejecting the gesture from the Fed to take on more risk, then price won't recover above this FOMC level, because technically from this day, money became cheaper. So in theory, if participants are taking risks, they should be above this level, okay? So hence, that's why I'm using this as that barometer. So that's kind of my read, just to update you guys where we're at on Bitcoin. I know sometimes consecutive streams, it seems like we're looking or talking about the same things, but it is with slight nuances every day, right? So I'm not really seeing much at the moment, and we're coming into the end of year where we're getting, we're already in low volume. A lot of Wall Street's probably going to close their books, all the funds, etc. So there's probably going to be thin liquidity. So I wouldn't be surprised if there is chop through here. But I'm going to be here. I mean, I don't plan to take any days off. So I'll be here with your legends day by day, calling it as we see it. Now, we'll just finish up on a quick round the grounds on other markets, right? First and foremost, all important stablecoin dominance chart. You really need to understand this chart and be looking at it daily if you're participating in crypto, because you need to understand that we're at this pivotal level, and if price keeps trending up this way, okay, if dominance keeps trending up this way with stable coins, Bitcoin goes into a much deeper bear market, right? This means we're heading into full bear market, okay? Because you just got to understand, if crypto participants are moving into stable coins, that means they're taking their money out of crypto tokens, right? So out of Bitcoin, out of altcoins, etc. And you can see here, when we break the range high, when the TT bands confirm bullish, and when weekly structure is shifting to the bullish side, that has meant that we're heading into that deeper bear market. So what are we seeing at the moment? We've got, oh, sorry, let me just quick clean up. The weekly bands are already bullish, okay? And again, if you want these bands, just DM me on X. I give them away for free. The weekly bands have already flipped bullish. Weekly market structure is bullish, right? It's turned over here. It's bullish. And now we're testing that range breakout where trending above here, you know, you can see how disastrous it was if you were a bull when this thing's trending above here. So don't get caught, don't get trapped, don't get tripped up by a lot of the, I'd say, you know, a lot of the accounts on X that are telling you that we're bottoming this, that, and the other. That could be the case, but observe this chart because we can go much lower. We are nowhere near a bottom if this keeps trending up, okay? Now, on the flip side, obviously, if it starts trending down, that is going to stimulate more liquidity into crypto. However, my current view is that any move down is going to be met with a lot of resistance through here, right? Or support, I should call it, in respect to this chart. And this more likely aligns with me, for me, as a counter trend rally, not the start of a new price discovery parabola. But like I mentioned, legends, we'll analyze this as we go. As long as you're here with me on stream daily, we'll be pointing it out as we go. There's some key things we need to look at if it does start heading the other way to understand if it's counter trend rally versus if it's an actual start of a new expansion or a new macro leg. And there's quite a few things, moving pieces that we'd need to understand, and we'll analyze it together as we see it. Okay, finishing up on the round the grounds. We already talked quickly about the 2 year, and look at that, it's already starting to tick up again. So again, that labor data, despite softening, it's not screaming, the market itself is not screaming at us that the Fed is going to come in more aggressive with loosening. And loosening is what's needed if you want more liquidity to flow to crypto, if you want to be a bull. The DEXI, we're still in this holding pattern, and as we mentioned, and as I mentioned in my Substack, right, the FOMC levels are on watch across a lot of the major markets, DEXI included, because in theory, by reducing the cost of money, right, by cutting the interest rate, the DEXI should also come down, right? It should weaken. That's typically what happens. So if the DEXI is reclaiming the FOMC level and pushing up, well, that again is telling us that market participants are moving into the dollar rather than deploying their dollars into markets, okay? So that would be a risk-off move. And we know, as I've been calling out, trending above here is the exact historical pattern that we see when a major shift in global markets is happening when we're moving into a bear market. So that continues to be on watch, legends. Let me just clean this up before we move on. Got to keep the charts clean, keep up with the chart hygiene. USD JPY also on watch because we got Bank of Japan policy rate meeting at the end of this week, right? So I said, again, in my Substack, this is the level, the key level that I'm watching where if we're starting to break down below here, we got to really consider what that means for global liquidity, right? Because the Japanese liquidity underpins a lot of global liquidity via the carry trade. And if the US dollar is losing strength to the yen, that could be the smoke before the fire where, you know, that the carry trade may be unwinding. Again, we'll analyze it as we come, but this is the main chart that I track along with the Bank of Japan. And anytime I think about potential carry trade stress, I just look at this chart because it just makes sense to me that if the carry trade is unwinding, the yen means that it's strengthening because money's moving back to Japan, right? So keep that on your watch list. I will point out US oil took a dump of 2% or so overnight with some of that softening labor. And if we just look at the trajectory of it, right, the main thing that I'll just point out here, why I look at oil is typically oil can be somewhat of a gauge on inflation, right? When you see oil heading up like this, it usually aligns with inflation increasing, but inflation often also increases when you're in when you're in a bull market, right? When you're heading into a bull market as well. Inflation is great if you're in hard assets, right? Because your assets inflate. Now, the inverse may also be true, where if we're seeing an environment that is potentially going heavy risk off, or there's recession concerns, you can typically see oil coming down and plunging. So that's just a signal that we're tracking at the moment. Just something we're keeping an eye on with these broader signals, because as discussed, we've started to see some early weakness come in across the indices as well, which we've been tracking. And I won't go over that again because I've gone over it quite a few times. What I will do is just point out that the RTY is now dropping back into concern level after taking out the all-time highs again and rejecting the FOMC. Okay, now it's back under the high. You know, you really don't want to see it lose this level, this internal structure level, because that would suggest that the structure could be turning back over. Now, the RTY is that small cap index, right? So it shows us breadth of capital, and we'll just flick over here to finish up on the risk dashboard, right? We've talked about this in the past, and I call it out in my Substack so you understand what this risk dashboard is. But we look at Bitcoin, the RTY, and NVIDIA as a gauge on risk market appetite, because they will always, historically, between them, they always top before the NDX and the SPX, right? Because these are, and they give you a good barometer on the breadth of or the scale of risk appetite. Bitcoin is always the first to move when it comes to liquidity stress, okay, and macro stress. In the previous bull market, topped around both of the last cycles. So I should say the last two cycles, Bitcoin topped around 280 days before the NDX, okay? So we got to keep that in mind, because Bitcoin has already turned over macro bearish. The RTY, if it starts heading down, usually tops around 30 to 90 days before the bigger indexes, okay? So if we start seeing this continued weakness in these three, it is a sign of caution that more weakness might be coming for the SPX. A major turn could be coming for our bigger indices, okay? And we are seeing those early warning signs, so we continue to track those. So all in all, legends, we had a good breakdown of Bitcoin, where we're at, stablecoin dominance, very important chart to track. And we are not in the environment for price discovery parabolas, okay? Bitcoin's not going to a new all-time high anytime soon. And if it is, and you're here with me on the channel, we will be here to call it together, right? We will spot those shifts in structure. We'll spot the shifts across markets, and we'll call it together. But as of right now, this isn't the environment for price discovery parabolas, and this really isn't the environment for bullish price action. So Bitcoin's macro bearish, and it is bearish until it proves itself otherwise. That's it for today's stream, legends. Hope you're well. Hope you got something out of that. Please like, subscribe. Consider following me on X. I'm very active there, and otherwise I'll see you again tomorrow. Same time. Thanks, legends. Take care.